our weekly edition of the Ashworth Wealth Weekly Market Update. We are grateful to have you here with us and are excited to share just a little bit of information with you. The topic today that we're going to cover is going to be, we're talking about housing and housing starts and how it's playing into the economy. As you can see from this chart here, the blue line is where the mortgage rates are, or the application, how many mortgages are being applied for. The black line is how many housing starts are coming online. And as we go through this, one of the things that we're looking at is the real estate market, specifically the housing market, is one of the lagging indicators on inflation. It's probably one of the last ones that shows up in the consumer price index. So as we go forward with this, as we're seeing a little bit of a slowdown in the real estate market, it's actually good news for the inflation front and good news for the Fed in seeing that the increase in interest rates is starting to have an effect across the broad economy. So from that standpoint, it's a very good thing. There are also some good things that we're seeing with regards to this, even though both the mortgage applications have gone down as well as the housing indexes. What we feel like, let me talk about the mortgages for just a minute. So right now, average interest rate on 30-year mortgages is 6.4%. Last fall, the peak was 7.1%, so they've come down just a little bit. And it seems that people are waiting just a little bit to see what's going to happen with the interest rates. The anticipation is for many people is that interest rates will come back down a little bit, and so they're waiting until those interest rates come down a little bit at the backside of the recession to figure out where the interest rates are going to level off. The flip side to that is that if the interest rates level off for a little bit, for a longer period of time than what people are anticipating, at some point you'll see people getting back into the marketplace and purchasing those mortgages, just from the standpoint that there is such an undersupply right now of single family dwellings. I've been visiting with some of my clients that are real estate agents. They're telling us that here in Utah we have probably an 8-year lag of supply for the demand that we currently have for single-family housing dwellings. So we know that there's a huge long-term demand that's not going to change. What the things that are going to change, obviously, is our perception on interest rates and our perception on things going forward with regards to recession and those types of issues. So another thing that I want to point out here is you can see here on this chart that on the black line, you can see that just coming into the first of this year for 2023, that housing starts started to tick up just a little bit. They're still well below what they were a couple of years ago, but they are starting to tick up a little bit. And there was a survey that was sent out to home builders here a little while back, and it's interesting to see that their index, they call it the Home Builder Optimistic Index, or something like that. But anyway, it just measures how much optimism the home builders have, and interestingly enough, that is increasing quite a bit over the last little while. So we see this as kind of a holding pattern, kind of a stabilization. Interest rates are going to become stable here in another probably quarter or 2 quarters. We'll kind of see what the long-term interest rates are going to be at, whether we're going to go into a recession. But we feel like that the worst is behind us in the housing market with regards to the drop-off of single home purchases. And so we just feel like that we're in a little bit of a holding pattern right now. We don't feel like we're in a bear market. We don't feel like we're in a bull market. We're just kind of in a holding pattern. And as we get surprises either one way or the other, we'll see the markets move either up or down depending upon what we see, the information that's coming out. Again, we're not quite through the woods yet, but we are getting closer all the time, and patience is king right now as these markets kind of do their thing and we allow them to work through the hiccups that we've had over the last couple of years. So Be patient, and things will work out. And we're actually a little bit excited about this news coming out today. We feel like that it's on over the long term will be a good thing for the overall markets. So with that, I'm going to close for today. Thank you so much for watching. If you have friends, family, associates, co-workers, anybody that you feel like might benefit from our webinars, please feel free to forward our link to them. And with that, we will sign off for today. Thank you so much for joining us.